I'm Jim Cramer, and welcome to my world.
You need to get in the game.
Firms are going to go out of business, and he's nuts. They're nuts. They know nothing.
I always like to say there's a bull market somewhere, and I promise
Mad money.
you
can't afford to miss it.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. Trying to make you some money. My job is not just to entertain you, but to educate you, so call me at 1-800-743-CNBC. When you don't know what you own, you know what you are? You are cannon fodder for the endless artillery barrage of pessimism that is called the news. That's what I thought when I watched this market rally today, even though it was supposed to get absolutely pummeled and sink into oblivion off of Egyptian tensions. What happened? Dow finished up 68 points. S&P advanced 0.8%. NASDAQ was up about 0.5%. Why is it so important to know what you own in that portfolio of yours? Because we now live in a world where the media is in total hurricane disaster mode every single day. They take every geopolitical issue, every weather issue, every story of crime and punishment, and they fan the flames of panic, portraying them all as equally huge disasters. Every negative story is exaggerated to make it seem as though it's the end of the world as we know it, or like we're on the eve of destruction, a la Barry Maguire, for a musical reference targeted at the older demographic. We simply have to accept that this overreaction is part of a sea change in the way the business media and the market work, a sea change that can shake us out of just about anything we own or might want to buy. I don't know, we seem to be unable to steel ourselves effectively against the endless gloom, unable to think opportunistically even for a moment, and instead just imbue all our thoughts with unlimited pessimism over all possible outcomes. That's why the market sells off every time there's instability in Greece, instability in Egypt, a debt crisis here or there, some trouble in a sardine-sized economy of Portugal, obituary for the euro. Yeah, obituary for the euro. How many months did we go down on that? So, euro's on fire. So, let's figure this out the mad money way, using the method that I would employ at my hedge fund whenever events occurred that immediately drove down the stock futures, which then, of course, always overwhelm the whole market. You know that by now. First, we got to put it in perspective. We have to ask ourselves, okay, the news is potentially tragic, potentially dangerous, potentially terrifying. But what effect does it have on the numbers, on the earnings, on the EPS? Let me give you an example. In the 20 years that I invested other people's money, there were a slew of exogenous events that hit the stock market. I used what I called the Bristol Myers theorem, named after the company I always felt that had the most consistent earnings imaginable. Here's how it would play out. We used to have morning meetings at my hedge fund, 6 a.m. I always felt if you came in at 6:01, I mean, what was the point? Might as well go home, since so much of the opportunity to make money had passed, which is why I dismissed you. I sent you home if you were a minute late. They were lucky I didn't throw water bottles or electric appliances at their Anyway, I saved that for when you lost me money. Every time we get one of these nasty events at the morning meeting, someone would say, but Jim, what are we going to do? Nuclear power plant, Chernobyl. Jim, meltdown. Jim, Iraq invaded Kuwait. What do we do? I'd sit back and I'd scream, dripping with sarcasm and arrogance, what the heck does that have to do with the earnings of Bristol Myers? Of course, the answer is nothing. So the first thing I always did when I saw or heard about these scary events, when the staff was so frightened, was to make a list of the equivalent of Bristol Myers, the companies that wouldn't be hurt if the event, even if it turned out to be worse than expected. Given that the media now blows everything out of proportion, and it seems like we get some terrifying new crisis every other week, you need to develop your own list of Bristol Myers' names. Maybe it's Kinder Morgan Energy Partners, KMP. Maybe it's Verizon. Maybe it's Bristol Myers itself. You got to be ready to buy them when the futures take everything down, as they did Friday morning. Then ask yourself, is this event really bad for all of the companies out there? People initially reacted correctly to this Egyptian thing when they reached for the oils, but you know what? Even those were down. If you go check the tape I did before coming on here, those were all down, courtesy of the S&P futures on Friday morning. Every one of those stocks was down. They were all tremendous buys, but people were panicked. The S&P sent everything down. If you knew what you owned and liked what you owned, as I liked the oil companies, then when the futures took those stocks down, you got an amazing buying opportunity. Next, you have to ask yourself, who else could benefit? Maybe you got to stand everything on its head, play it out. Let's see, if part of the problem in Egypt is the inability to feed people, and our government wants to look good and get friendly with whoever comes in or stays in, then you got to reach for the fertilizers and the farm equipment stocks. Again, almost all of these stocks, like charitable trust named Deere or Potash, they were hit on Friday, many for multiple points. How about the defense stocks? Big potential beneficiaries of the instability in the Middle East. They were all up nicely today. That was such a natural thing. At one time, people would be opportunistic. Not anymore. Everyone's just too negative. Finally, we really have to go completely counterintuitive. And we got to ask, is it possible, get this one, that the event could actually have a positive economic outcome? Positive. I mean, could anything actually go right economically? This is the hardest prism to adopt. First of all, because we're not thinking economically, right? We're a 24-hour news cycle usually presumes everything's going to go wrong. They're not thinking about money. Believe me, I know this is really hard. I went out Saturday night to local watering hole Roots, and bingo! Before I had taken my coat off, some patron comes up to me, martini in hand, tells me he's a hedge fund manager, almost spills the darn thing on me, and says, it's the end of the world. It's the end of the world, Jim. So I'm short. Okay, I mean, I am short. But, I mean, he was, like, short, like stocks. I wanted to know, like, what's the end of the world? And he was astonished. Jim, Egypt. Egypt's the end of the world. Of course. I told him what I always tell all these hedge fund managers who are constantly hitting me up wherever I go. I say, you worried? Take action. Get short. Get massively short. Knock yourself out. Now, he thought, of course, I was blessing that action. In fact, I was just trying to get to my table, for heaven's sake. But it did get me thinking, what if everyone's too negative? What could turn out right? I mean, I don't know. I mean, wasn't this the year of living dangerously? Sure enough, it just might be. But here's the twist, provided by my friend Michael Sembles, Chief Investment Officer at J.P. Morgan. Mr. Sembles points out that few economies on Earth are as poorly run as Egypt under Mubarak. And the situation there looks a lot like, yes, Indonesia, 1965, after the year of living dangerously, where the government was overthrown and Suharto took power. Turned out to be a huge positive inflection point for fantastic economic growth in Indonesia. Hey, could it happen? Look, we don't know. We know that Egypt's one of the worst-run economies in the world. What we do know, though, is that the market did indeed go higher today. It was astonishing. I'm willing to say that. We did get too negative. Complacency? No, the people who matter, the quick-draw hedge funds, they weren't complacent. They took radical action right on Friday. It just happened to be the wrong action. The bottom line, if you know what you own or what you want to own, you can watch the days of living dangerously and come out ahead, not behind when these terrifying events begin. There will be many more of these, many, many more, and we need to profit from them, not run from them. Let's talk to Nolan in Texas. He might be the guy who owns the Rangers. Nolan.
Jim, great to hear your voice. Calling you from the wind farm capital of North America. That's Sweetwater, Texas, and Nolan County.
Holy cow, you know what? I actually know that area because Boone Pickens once described it to me. You're absolutely right. It is the wind farm area.
Calling you about a great company that has terrific products, good drinks, soft drinks, excellent snacks, Frito-Lay. We're talking Pepsi, of course. I've had it in my core inventory for a long time, and it's just it's sinking on me, and I've been backing out and buying some of the other suggestions that you've had that have a little more zip. I know that this sector is backing off, but what might happen to give Pepsi a catalyst or a boost, or is it going to stay just floating there for a good while?
Well, look, we could be talking Dr. Pepper. We could be talking Coca-Cola. See, here's the problem. We are in an economic cycle of expansion. We saw that from the purchasing manager's number this morning out of Chicago. When things are expanding, people don't even care whether... I mean, I'm telling you, Indra Nooyi is the fabulous CEO from Pepsi. She could be printing numbers, I kid you not, 25% better than they are, and this stock would not go higher because it's in the wrong sector. That is so aggravating for those of us who own these high-quality stocks. It drives us crazy. But remember, we got to stay diversified, and right now, that's the wrong sector. And I just hope that the good people of Pepsi realize it ain't their fault. Can we go to Scott in Pennsylvania, please? Scott.
Cramer, big booyah from Penn State University.
Yes! Yes, Nittany Lions. Boy, it must be quiet there right now.
With the president coming, oh, no.
Oh, okay. What's up?
Well, Jim, I'm calling about Alliance Resource Partners, which has done quite well despite lackluster support from analysts over, like, the year. Their growth and dividend continue to seem attractive, but I'm considering that with the recent M&A activity, could analysts continue to not show support for this coal MLP?
You know what? I have not been...
might make a takeover nearly impossible.
It's certainly possible. I have been so pro-coal, although, of course, the industry hates me because I always say that coal's part of that a black lung, no rainbow coalition that they've developed. But it doesn't care. I'm not about friends. I just do know the stocks work. This one works. I reiterate that I like Peabody, BTU, best of all, because that is the growth coal stock. And in their conference call, they talk about the super cycle. Hey, Peabody, can we put, like bygones be bygones, which I know is absolutely impossible, and you come on the show? May we go to Steve in Massachusetts? Steve Areno.
Hey, Jim, big booyah. It's Steven from Big Boston Booyah. How are you?
Couldn't be better. How about you? Boston took them. Boston took them this weekend in a Laker game. Of course, I was watching Oklahoma City, which I just realized had a team, versus Miami.
We love you. We love you. Now we're just going to a little snow here. Wanted to let you know I purchased Nordic American Tanker in May 2009 at $36 a share on your recommendation. And as we all know, the very next day, the company announced a secondary offering. The stock has since continued to disappoint and trading around 24 and change. With the oil sector on the run, I was hoping that would have joined in the rally and finally turned the corner by now. So with that said, yep.
You're a jet. First of all, you could have said, Cramer, you're a complete idiot because you like this company. And I would have had to say, well, geez, you know what? I don't think I'm a complete idiot, but this is the best of breed in an absolutely horrible sector. And Herb Jorgensen's doing a very good job, but the problem is there's way too many ships, and he's got a lot of ships too. I think the answer is there's not a lot of upside until we get world economic growth and a lot of ships scrapped. In other words, I tried to get people out of this. I guess I didn't do a good enough job. There's no sense in blowing out of it now. In the face of a crisis, if you know what you own, or you know what you want to own, or you know what you want to buy, and keep a cool head while everyone else is panicking, you and me go make some money, some mad money. We'll be right back.